Good day, guys. Here in this video, I want to show you how to analyze the chart. It's called top-down analysis. So what I trade impulse and correction. Impulse and correction. When I talk about impulse and correction, I talk about something like this. This is an impulse. This is correction. This is impulse again. So this is what I'm referring to when I say when I say I trade impulse and correction. Again, impulse, correction, impulse. So that's where you find something called bear flag, triangle flag, bull flag as well, symmetric triangles. So yeah, the different kind of patterns that you find in the strategy that I trade, and it's been a strategy that has been working for some time, and I can show you that if you try it, it will work much better than the strategy that you are trading now. I know that right now you are trading support and resistance. So I'm going to be analyzing the Euro NZD, Euro and the Kiwi, so that you can see. I'll start from 1 week is a top-down analysis, meaning I'll start from 1 week just to show you how does it actually work. Okay, just sit down and relax. It look easy. Let me tell you something. It look easy, but when it's time to do it, it's not that easy. I won't lie to you. Let me just take out or pull out some impulse and correction here and show you exactly what I'm talking about. The strategy I'm referring to. See this, the price came down here. Let me just this is a correct one, is the right one. If I talk about impulse and correction, this is what I talk about, guys. This is what I talk about. Let me just put it here. You can see here that the price was pushing down in an impulsive way and came here, and there was a correction here. Okay, let me see my pen. The price pushed down here. This is an impulse, and this is a correction, and this is an impulse again. This is a leg. This leg, we call it an impulse as well. So now how do I trade this? Because this is how the banks and hedge funds trade. So what they do is they push the price down. Remember, guys, that we don't move the price. We as retail traders, we don't move the price. The hedge funds and the banks, they are the ones who are moving what? The price. So because they've got big money, so that's why they have a power to move the market. So now you can see here that's okay. Here the market pushed down impulsively, and here I can say maybe they took the profit or they were loading some positions here, and thereafter they push the price down. So how do I trade this? So now okay, maybe you've seen this impulse and there's a correction. You wait here. You wait here in this correction, because definitely it's going to be a continuation, because the price is coming from the top and correcting here, and this way you're going to enter as soon as this structure is broken. That's where you're going to enter to the sell here going down and catch this good move. Okay, so that's how I'm going to be analyzing the chart, and I'll be showing you exactly the impulse and correction in this chart that I'm going to be analyzing right now. I hope we understand each other right now. Okay, let me just remove this. Let me make my chart clean, because I like the clean chart. I don't like this chart. I want to make it clean now and just remove all this, remove everything that was here. Oh, come on, I want to remove you. Come on. Yeah, all these things I want to remove them, and now I go to 1 week. Why 1 week? Because 1 week I want to see the structure of the market, where the market is heading. Other people, they use what you call, they use the moving average 200, EMA 200, exponential 200. Yes. So now to see the structure of the market, but we can just have a look at the market. Okay, just look, because you can see the market. Because if you look here, from here, you can say this was 17 February 2020. So I can't use this data, it's too old. But I will start from here, of which is 22 February 2021. So I'll start from here. What I do first, I just mark my swing low and my swing high. This is my swing low here, mark it. And the second one is this one here, mark my swing high. And then after, what do I see? I can see that the market was pushing down, it's pushing down, and now, but it's not in a correcting manner, but now it's pushing up. Now it's going up in a correction manner. It's correcting, it's not an impulse, or it's just in a correction manner. So now I can just mark this correction here. This is the correction here. Yeah. I can just push much closer so I can get as many touch as possible. Guys, I put my lines on my wick, not on the bodies. If the bodies there is fine, I can still put, but on my wick, because I know that very well that is the wick that can kick you out. They can come and push you out, and the wick is left there, and you're out. Okay, so you can't tell me that you're going to be focusing on the body of the candle only. So now, okay, done on my on my 1 week. So now what I'm expecting, because now the market has pushed down, correction here in an ascending manner, meaning now I'm waiting for the price to push down. Mr. Zamini, why the price is not, Mr. Dio, why the price, why you say the price gonna push down? Why can't you say the price gonna push up? It because this how the market moves. Impulse create a correction in an ascending manner, like sort of like a pullback and push down. So this is a correction. This is what is happening here. Né? So which means here we have to wait here as now as the structure has been broken a little bit. So that's where you enter. Okay. So okay, let me just sort this one out now. Clean this one, remove this so that we can proceed. So let me go to daily time frame now, because it's a top-down analysis. Let me go to daily time frame now and see what is happening there. On my daily time frame, I can still see here this candle. Let me just put my thingy nicely. Okay, my thingy, my correction. Remember, guys, this whole scenario is a correction. Here is a correction. Remember, inside the correction, you can still find impulse and correction as well. Because as we keep on dipping down, moving down, scaling down with this chart, and you'll see that. Okay, you'll see that. So okay, you can still see here there's a correction here, and the price, now you can see that the price broke the structure and seems like it's pushing down. Now it's pushed down and pull back. I think it's coming here to retest this structure and push down once again. So let's continue. Let's go to 4-hour time frame, H4 or H4H, something, and so that we can see exactly what is happening in this chart. Okay, let me just sort this one nicely first. This one nicely, and yeah. Okay, now you can see, as you see now, a bigger picture now. Okay, I can start even here. A bigger picture now that the price here, I can start here. You can see that there was a correction here, and the price, there's the impulse. I mean, this impulse from here down, and now there was sort of some like a correction here in an ascending manner. In an ascending manner. Okay, is correct. The price is going up correctively. Yeah. So here, there's nothing that you can work on here, and you can see here that's okay. Although some of you guys will say, okay, this is a reversal pattern. I can see the reversal pattern. Yes, it's fine. That's what we look for as well, because you can see here, this is like an M. A reversal pattern is a reversal pattern, guys. So here as well, okay, here as well, you can see that the market, okay, this is like a triple top as well. So, but I don't consider this, I don't consider a double top and triple top a lot. But yes, at some point they play a huge role. So hence I said I don't trade support and resistance, but I took my strategy where if I see some opportunities in support and resistance, I take advantage of that. But I don't trade support and resistance. Okay, so you can see here, and the price here, you can see here a double top is as well here on top, 1 2 double top, and it pushed down. This is a reversal pattern, guys. Is an M. See, this one is an M, guys, is an M here. It pushed down. That's a reversal pattern as well. It's a reversal pattern. Let me move this. I don't want it in my chart. Just move it. The reversal pattern. When you come here, you can see that what the price did now. Check what happened here. Check what happened here now. What the price did here now. It's a correction here. This is a correction and impulse. Again here, when you check here, there's another correction here. Okay. There's another correction here. Let me just set out my candle nicely. There's another correction here, and there's an impulse. There is an impulse, correction and impulse. Yeah? So let's go to 1 hour now. Let's move to 1 hour now. Okay, go to one, because we are spotting what impulse and correction. But here, guys, there's so many opportunities here in the market. You can see this, because guys, you must understand, we are trading against the hedge funds and the banks. These people, they got big money. They move the price. Check here. Here, impulse. Here, there's a small correction here, the loading and impulse again. Once you see the impulse, you must know that the banks are in the building, the hedge funds are in the building, and they push the price up as well. They're the ones who push, who keep on pushing the price. You can see all that. You can see all these impulse that you see them here. You see them here. Sometimes, if you have noticed, when you are trading, when you are trading at 3:30 South African time, during the US session, you can see sometimes that they are the one who are in control. They move the market. They move the market. Sometimes you can do your analysis and say, okay, it's going down. Yes, it's going down, but now, if you are trading support and resistance, you'll be in a big problem if your strategy is based on support and resistance only, because you'll be kicked out early hours of the morning. You'll be kicked out very, very early. Okay, so yeah. So okay, no, I wanted the white color. So now, what is happening here is, what is happening? We're gonna go to 1 hour, because guys, I want you to understand that as when you see an impulse, the banks are in the building. Yeah, check this W shape. This is a reversal pattern. This is W. Yeah, this is a reversal pattern. This one you can say is a head and shoulder, although it's not, because there's a head shoulder here, there's a head, there's a shoulder here. Head and shoulder is a reversal pattern. These are the patterns that you have to look at in the market. Okay, good. Let us proceed. Go to 1 hour. Go to 1 hour now. I'm in 1 hour now. Let's check here on 1 hour. What do we see? What do we have? You see now this big correction here. You see now this big correction here. And this one, okay. There's a correction here as well. So at the same time, there's double bottom, there's a double top here. You see, guys, it's very easy to spot this. It's very easy to spot this, because look, guys, look, I want to look at something. Look here. After the correction, impulse, correction, and it breaks. So where do you enter? You enter here. This is where you enter. You enter just here. You enter here and you come out here. Okay. So here, I was expecting that there's gonna be a correction again and the impulse pushing down, but the price failed to push down and started pushing up. So here is not that you're gonna be caught out at the wrong side of the market, because what you do is you wait. You don't just enter, guys. You don't, this thing of just placing a trade, you don't just enter. It's a correction here. Check, this is a correction here. It's a correction. You wait for the correction to be broken first. This is a correction, and you have to wait for the candle to break here. And as soon as it breaks here, and you enter, especially here, I can put it here where there's wicks, where there's these 2 wicks. That's why you enter. You put another order as well. So okay, guys, let's continue now. Let's continue. What do we see again? Yeah, I can see something like this. Okay, Mr. D, how do you spot these? I've been doing this for some time now, so it's very easy to spot these patterns now. I just clone this one. Yeah, it fits perfectly. Yeah, I've been doing this for some time now, so I know how it moves. So, okay, we are on 1 hour. So now let's go to 15 minutes. That's where on 15 minutes, that's where we get our entries. Guys, we'll see something. Let's go to 15-minute time frame. 15-minute time frame, so that you can see exactly what is happening. So check on 15-minute time frame. Okay, let me just put my target will be here, guys. Ne? My target will be here, because now I see the opportunity here. What is happening here, guys? You see, there's a correction here. You see, there's a correction here. Wow, this is a nice one. There's a correction here. Mark my word, guys. Mark my word. Wait, mark my word. I'll post this again when the price has reached the target. Mark my word, guys. So now I'm on 15-minute time frame. That's where I enter. Ne? I take my entries, ne? Because this one is correcting in an ascending manner. Is correcting in an ascending manner. So what is happening here, guys? The price pushed down. Here, if you check here, there's another correction here. Push down, created some correction here. Created some correction and push down again. Check. You can enter here the price. You can enter here the price pushing down, or you can enter here. Okay. For instance, high risk entry. This is the one. Low risk, medium risk is here. You enter here. Nah? Let's say your second trade was here. This here you're gonna enter your third trade, because what I'm expecting the market to shoot down. So Mr. D, where's my stop loss gonna be? Let's say here. Where's my stop loss gonna be? Your stop loss gonna be just above the structure. You don't, the stop loss, our stop loss, guys, is very tight. It's very tight, because I always say, like, if you have read the book Trading in the Zone by Mark Douglas, he says, cut your losses early and let your wins run. If you know a trader Tom as well, this guy who trade with 200 lots, 300 lots, yeah, he is very good. He's a very good guy. He's a very good. Just check him on YouTube as well. He's a very, very good guy, but he trade a different strategy. But when it's come to psychologically, he can just help you a lot. So Trader Tom. So guys, I'll leave the name of the guy below, and this book Trading in the Zone. I'll leave the thingy the name again in a description. So guys, here this is where my entry will be. So as soon as it breaks here, okay, let me just take my error this side. Oh, sorry, my error this side. As soon as it breaks here, this is where I enter. Now, this is where I enter. Where's gonna be my first TP? My first TP gonna be here. My first TP gonna be here. This is my second TP, a 9% road. So this one is proving and tested that as soon as it breaks this structure, definitely you're gonna catch the whole move. It might not get there. Today is Friday. It might not get there by maybe on Monday when the session, when on Sunday night when the session opens. It might get there maybe by not Monday, maybe Monday in the afternoon, depending how volatile is the market on that day. And it can be Tuesday, it can be on the same day, Monday. It depends on the volatility of the market on that day. So guys, this is how I analyze the chart from 1 week to top down analysis to 15-minute chart, where 15 minutes where I take my entries. Guys, if you want to be part of my community, trading community, you're more than welcome to join, and I'll leave my WhatsApp number below so that you can just contact me, or maybe I'll leave my link for Telegram as well. We have a Telegram group, we have a WhatsApp group where we are more active, and we have a Telegram group as well, guys. So in this one, I'm gonna leave my Telegram thingy. You can join. It's free of charge, guys. It's free of charge, whereby I'll be mentoring you, whereby I'll be mentoring you. At the same time, I'll be giving you free signal. We are not paying a cent. And guys, I'll share the links of the brokers that I use. If you want to trade, maybe let's say you want to trade Nasdaq, you want to trade Veracity, and you want to trade Boom Crash. I'll leave the links for those brokers that I use. And okay, because it's not a secret, let me tell you, I use XM, I use Deriv, I use Veracity Market. So but you can choose which broker you like, and you can, because all of them, they are good, guys. So I'll leave the links of the brokers that I use as well below if you are interested, and you can just take advantage of that. And I'll leave the link for a Telegram group as well. Okay, guys, I'll see you on the other side. I'll see you on top, because the bottom is overcrowded. So enjoy your weekend, guys, because this video is Friday, and I saw this opportunity. I said, okay, I didn't notice that there's this opportunity, but now I can see something here, and it's so exciting. It's so great, and wow. Okay, guys, I'll see you on the Telegram. I'll leave my WhatsApp number if maybe you want me to teach you Forex from the beginning till you're able to analyze a chart like this. It's fine. And I'll leave my website, I think, a link as well, so that you can go to my website and see what we offer on our website. And we have a Telegram group, as I said, it's free of charge. You're not paying even a cent, but there is a condition. There's one condition. I'll tell you about that condition. You must use one of my brokers. You must use one of my brokers in order to join my to get access to my free Telegram group, so that I can mentor you and just help you. Is free of charge, guys. I'm not charging you even a cent. Thank you. Bye. See you on the other side.